Hi everyone, I am Punya Aggarwal, ACCA affiliate and one of the admins of Being ACCA. And in this video, we will be discussing about the Uniheart company question, which is the first question of your pre-June 2024 AA mock. I will be solving the question with you. So let's begin. Firstly, let's talk about the timestamp that we should ideally be using for this type of a question. This is a 10 marker question in itself, which will be having 5 questions each of 2 marks. That makes it 10, and timestamp should be 10 into 1.8 minutes. Ideally should be 18 minutes, but when you're practicing, I would recommend you to not take more than 15 minutes for such a small question. This is not a very tricky question, very simple question. So do not exceed 15 minutes when you're practicing this particular question. So let's start with the debrief. Now there are 2 techniques of starting a particular question of section A in audit. First way is that you start reading the case study on its own first. You read the full case study and then go on to the questions. And another way is that you read all of the questions first and then you read the case study and then you solve the questions. So I personally recommend students to first read the case study, highlight whatever is important in the question, and then go on to read the questions. Like first read the case study and then go on to read the question. So it does not matter. Actually, you can go ahead with any of the approaches. It does not matter. So let's start with the reading of our question. Uniheart company is a listed company. Very important first line. Always highlight whatever you feel is important. So a listed company is important for me. So that is the reason I've highlighted it. Is a multinational company operating in technological sector. They provide software solutions to various industries, including finance, healthcare, manufacturing. Their statutory auditors are Alpha and Company. So you are Alpha and Company, who is the auditor of a listed company, which is Uniheart Company. During the audit engagement for year-end financial statements, the audit team encountered several ethical dilemmas. So in this question, basically, you will be dealing with all of the ethical issues that we usually have: self-interest, self-review, familiarity, all of those threats. So let's begin. The audit engagement partner, Sarah, and her. So I basically consider yourself as Sarah because you are the auditor of Alpha and Company, and the CFO of Uniheart Corporation. So CFO is the chief finance officer. He's a very important person for the financial statements. Uniheart corporations were college roommates and have remained friends over the years. Although due to their busy schedule, they have not met as such over the recent times. They kept in touch at least once a month. So here the bell should ring in your heads that this can be, or this can be here, can be a familiarity threat. Okay, because they are friends from such a long time. So here it is a familiarity threat because I know the CFO very well and I have been college roommates from that person. So maybe I will be reluctant to manipulate, actually tell what is the difference or what is the wrongdoings in the financial statements. So let's begin with the next paragraph. During the audit, the engagement team discovered that Uniheart company has overstated its revenue by recognizing sales early. That means that they are not following IFRS 15. The CFO requested the auditors to overlook this issue again because the CFO is a friend of Sarah, the engagement partner. So, of course, he can say it, emphasizing that it was a one-time occurrence and would influence the company's stock price negatively if disclosed because it is a listed company. And this was a material issue. This is a very important thing, that this is a material issue. I'll highlight it with a green pen. Okay. The audit team received an invitation. So this is like another. So here what we have done is another self-interest threat we have, that they are saying that do not do it because it will again negatively impact the financial statement. So maybe this can also be an intimidation threat, right? Next. The audit team received an invitation to attend a lavish dinner hosted by the company. Again, lavish dinner, the bell should ring in your heads that this is a self-interest threat. The CFO assured that it was a gesture of appreciation for their hard work. However, the team wondered if accepting such gifts would violate their independence. 110% it will violate their independence. So this is again a self-interest threat. Lastly, Alpha and Company has identified that the current year fees to be received from company for audit and other services will represent 16% of the firm's total fee income and total to 15.5% in the prior year. So again, this is an issue. This is your fee dependency risk, I'll just write over here. This is a fee dependency issue because our fee should not exceed more than 15%, or else we have to do something about it, right? So last year also it was 15.5%, and this year it has gone up to 16%, which is a major alarming point over here, right? So let's read the last paragraph and then we'll move on to the question. The CFO expressed urgency. Again, alarm should ring in your heads. Urgency in the financial audit report to meet regulatory deadlines. The audit team felt pressured to wrap up quickly, even though some areas require additional scrutiny. So similarly, this is again your, which threat is it? It is your intimidation threat, right? Okay, so let's read the question first now. Let's move on to the question now. Okay. What should Sarah, the engagement partner, do regarding her personal relationship with CFO, which is a familiarity threat? So, mind you, CFO is a very crucial person for the financial statements because he is the head who is looking after the finance department. So, he is a very crucial person, and Sarah is in directly contact with the CFO, and there is a close relationship between these two, right? So it will of course affect the independence and the objectivity of Sarah, right? So these are some of the pointers that you should remember while you are reading the question, right? So let's read this. So one way is you can do that, like the easiest way I suggest students to go for is elimination method. Just eliminate the pointers which you think are not at all correct with the question, okay? Disclose the relationship to the audit committee and seek guidance. Okay, this can be one. We'll see. Maintain confidentiality and proceed with the audit. Of course not. We cannot proceed with the audit because, as I said, the CFO is a very crucial person for the financial statements. And if there's any misstatement in the financial statements, it can adversely affect your auditor's report, right? Recuse or remove herself from the engagement. Recuse basically means, if somebody is not aware of the wording, basically means you are stepping down from something. Okay, so you are, removing yourself from somewhere. So recusing means that you're stepping down from the audit to avoid any kind of biasness which can occur because of the relationship with the CFO. So that is recuse or remove herself from the engagement. So this can also be one of the areas, like one of the correct answer. Accept the situation as common industry. No, whenever there's something in independence, in objectivity, of course we cannot accept the situation, okay, this will happen. Not at all. You are in an audit field. You cannot just accept such kind of situations which can adversely affect your auditor's report, your financial statements. No, a big no, a big no. Okay, so this is the elimination method. Now I have to see that is it like the first one or is it like the third one. So if I go with the disclose the relationship to the audit committee and seek guidance, what kind of guidance would you seek? You directly have a relationship with the CFO. I don't think so that seeking guidance would do justice to your independence and to your objectivity. So you should simply refuse herself from the engagement so that her independence is not being affected or the objectivity is not being affected. Simply. Right. So the correct answer here is third one, which is recuse or remove herself from the audit engagement, right? Okay, let's move with the second question now. Okay. Let's see the second question now. What action should be taken by the audit team regarding the early recognition of revenue? So wherein they are making material errors in the financial statement, because here they have clearly stated that this is a material issue, right? Ignore it as it will influence the overall financial performance and position significantly. So why will we ignore it? It will not influence. How will it not? The statement is saying that it is a material issue, right? So ignorance, not a correct answer. Report it to the CFO, but exclude it from the auditor's report. Why will I exclude a material issue from my auditor's report? A big no, right? Adjust the financial statements to reflect the accurate revenue. See, one thing you have to be very clear in mind. I know that a lot of students are not clear with this thing is, as an auditor, you cannot do anything to the financial statements. You cannot adjust, you cannot amend, you cannot make the financial statement. You are not responsible for doing this. As an auditor, you are just supposed to see what is right, what is wrong, and then communicate the same to the the public or those charged with governance. Simply, that is your only task. Consider this as your teacher and student. If student is giving you a test, I am the student, I'm giving test to my teacher will only tell me what is right in my answers, what is wrong in my answers. My teacher will not be actually solving the questions, the numericals for me in the test. Similarly, the work of auditor. So here they are saying that the adjust, so we are the auditor, because here they are saying what action should be taken by the audit team. So here, of course, the audit team cannot adjust the financial statements. I can only tell what is right, what is wrong, what should be done next. That's all I can tell, right? Similarly, of like a teacher will only tell you that this is right, this is wrong, and how can you improve. Simple, right? So this is wrong, this is wrong, this is wrong, and this is right. So now let's understand why this is right, right? So reported to the appropriate level of management can be those charged with governance and those charged with governance, and request they correct the misstatement. Of course, management or those charged with governance will are the one people who can actually amend the financial statements. One thing. Second thing is, your those charged with governance are independent bodies, because they are not involved in day-to-day operations of the company. Okay, management is responsible for the day-to-day operations. However, the TCWG is not responsible. So that is the reason they will be independent, and they will be more towards correcting the mistake that there has been in the financial statement, right? So this is the correct answer, which is your D part, reported to the appropriate level of management and those charged with governance, and request that they correct the misstatement. Let's move to the next question. These are very, very easy and simple question. I think the first question, which is there in your pre-June mock, is very scoring, very, very simple. You just have to read the questions a little carefully, and I think you'll be good to go. Okay, next thing. Regarding the invitation to lavish dinner, okay, so what we talked about over here about the lavish dinner, which of the following threats to auditor's objectivity may arise? So what threat will arise? Let's discuss that now. Okay. Self-interest. Yes, of course, it is a major self-interest threat over here, because of course, who doesn't like going to like fancy restaurants, 5-star restaurants, 7-star restaurants? Of course, you do like, right? So that is your self-interest over there, because I really want to go to that lavish dinner. So that is a self-interest threat. So second one is self-review. Okay, how is it self-review? If I'm going to a lavish dinner, just think it logically. Okay, you do not even need to have like a conceptual understanding of this thing. Just think, logically, that why do you need? How can it be a self-interest threat if you're going to a restaurant having dinner with the client? It will not be self-review threat. It can be familiarity, because of course you will be having your informal conversations over there. You'll make friends, and you'll make you can have that informal conversation. So that is familiarity. So now the thing should, the immediately a person who is very quick in thinking this will think that, okay, in this, whatever, wherever 2 is coming, that has to be eliminated. So this is eliminated, this is eliminated, and this is eliminated. The last point is 1 and 3. In self-interest, as we discussed, will be there. Familiarity, as we just discussed, will definitely be there. So a smart person will not actually have to read all of the points. He'll see, okay, self-review, what the hell are they talking about? Self-review to ho hi nahi sakta hai. So I'll just remove all of the pointers. Jisme 2 hai, and we'll get the 1 and 3. So this is so damn simple. If you know the concepts, if you apply your brains, you will be good to go with the A part of audit. Okay, next question. Question number 4. Which of the following safeguards? Okay, so they have given us some kinds of safeguards. Safeguards would not be relevant in mitigating the threat identified in relation to the fee. So the fees here is fee dependency threat. The threat is fee dependency, and our fees cannot exceed more than 15% fee, the amount of fee that we are taking from a particular client, right? Now here, please read the question carefully. They have highlighted it in bold letters that not. So it is not a safeguard. That means only one out of these four is not a safeguard, and rest three are safeguards. Okay. So okay. Disclosure to those charged with governance that fees from Uniheart company represent more than 15% of total fees. Of course, we have to tell the those charged with governance because they are independent parties. So of course, this will be a safeguard towards the ethical threat of fee dependence, right? Then next is, so this cannot be the answer because this is a safeguard and not a safeguard. This is not the opposite of it, right? Second is a pre-issuance issuance review to be conducted by external accountant. Again, the external accountant is an independent body, will bring independence and will bring objectivity. So this is again a safeguard to the same, right? The use of separate teams to provide the audit and non-audit services. Now your brains, the bells in your brains should click, and you should understand that if I am, separating the two engagement teams, how will it how will it ensure that I am not fee dependent? This will ensure that I'm confidential. Confidentiality will be ensured because of this, but not your independence, not your fee dependency, not your self-interest threat, right? So this one is the correct answer, as this will not ensure the safeguard towards your independence, towards your objectivity, towards your fee dependency issue that is there in this question, right? Okay, let's move to the next question, which is the last question for this particular case study. Okay, let's read it. The CFO of the client has expressed an urgency, which was there in the last line that we read, has expressed an urgency, just a minute, yeah, urgency in finalizing the audit of the report to meet the regulatory deadlines. The audit team felt pressured to wrap up quickly, even though some areas required additional scrutiny. As an auditor, which of the following would be the most appropriate safeguard to mitigate this threat? So most appropriate, most. So there can be a situation where there are two safeguards, but you have to look at the most appropriate safeguard to mitigate this threat. Okay. Agree with CFO and quicken the audit process to meet it. Of course, I will not agree with the CFO because he is the person who is telling me to be quick. And of course, I cannot agree with them because I have to have additional scrutiny over some of the areas. So a big no. Resign from the audit engagement due to the pressure from the CFO. So this is something which is very extreme. Okay, this can be a situation wherein we are not having any other solutions and then we are going to the resignation part of it. So this cannot be the immediate solution to this, right? The audit partner would politely inform the finance director that the team would undertake the audit in accordance with all relevant professional standards and quality management. So this will ensure, so this thing will ensure that the audit process is not compromised, okay? Because I'm telling my client that this is the proper procedure has to be followed, right? And integrity and objectivity of the audit process is maintained despite my client telling me that please just pressurizing me that do it fast, do it fast. So I'm telling them that no, this is a situation I have to be very careful with for some of the areas where additional scrutiny is required, and I will need my desired amount of time. And then if they refuse to do so, then I may think of resignation. So this is the first and most appropriate safeguard for this particular situation. So the correct answer for this is your CPA. Okay. So I hope that you understood this very, very easy March company question. And let's meet in the next question for pre-June 2024 mock.